What's up guys, welcome back to DCA. So what we're going to do in this video is take a look at the total market cap for the altcoins. And we're going to look at this in relation to the total crypto market cap. Now we've talked about this in some recent videos. We've looked at this effect and how this is sort of influencing the dominance of Bitcoin and Ethereum and other assets. So, if we go back to the video we've recently done, we showed how, this chart here, this red line that we have is the typical way that you see the Bitcoin dominance. However, we are showing that, in fact, this is an underestimation of the actual Bitcoin dominance. The true Bitcoin dominance is actually here in green, because if you go back to 2019 or before that, there weren't really many stablecoins around, or if there were, the market cap of them was very small. But we've seen an exponential rise in the total market cap of stablecoins. And so if you include those stable coins in the value of the Bitcoin dominance, you're always going to see that, the Bitcoin dominance is being underestimated, especially when we're moving into a bearish segment of the market, because stable coins are staying at $1, whereas Bitcoin is falling. But this isn't really telling us anything about what Bitcoin is doing against the rest of the altcoins, which is the entire point of the Bitcoin dominance chart. So we made this new metric where we exclude the market cap of the stable coins, and we see that rather than the reported Bitcoin dominance of around 43%, the true Bitcoin dominance is actually much closer to 52%, which puts us kind of on par of where we would have been at a similar time in the last market cycle as we were heading into that bearish segment of the market during 2018 into 2019. So what we have here then is the market cap of the entire cryptocurrency market, and we've excluded the stable coins from this. So you can see right now the total crypto market cap is sitting right at around $720 billion, okay? So we are right in this zone, kind of back where we were in December of 2020. So we've actually moved back now right to the point we were at when the bull market started. A lot of people consider the bull market to really have got kicked off in December when Bitcoin was sort of moving up, making a new all-time high. Coincidentally, Bitcoin's price is almost exactly where it was back at that same time. So this total crypto market cap obviously is going to be heavily influenced by Bitcoin. We're essentially back where we started before the bull run really got kicked off. So let's start by looking at this chart here. And this just shows us the rise of stablecoins. So you can see that up here we still have the crypto market cap, the total crypto market cap, where we're sitting at around $740 billion. And down here we have the total market cap of the stablecoins. So we went from around a market cap of around $4 billion in 2019 all the way up to, right at around $100 billion in mid 2021. And even, at the start of the bull run back here in December or even January of 2021, the total market cap of stablecoins was only around $25 billion. So this market cycle really saw the rise of these stablecoins, specifically this bull market portion of the cycle. And, we rose all the way up to around $150 billion towards the beginning of 2022. And this has just slightly come down now. So currently the market cap of the top stablecoins is right at around $140 billion. And this has some significant implications for the market that we're going to talk about today. Okay, so what we're showing here is the total crypto market cap in pink minus USDT and USDC. So it's excluding those values. And we're comparing that to the total crypto market cap of the stable coins divided by the total crypto market cap. So in other words, we're looking at this in terms of the dominance of the stable coins. And you can see that right now, the stablecoin dominance is actually around 14%. Okay, so we've seen just a dramatic rise. In fact, if you go back all the way back here to 2019, it only made up around 2% of the total crypto market cap. And then even in the sort of its peak in the bull run phase of the market, it only got up to around 7%. So the stablecoin dominance has almost doubled now in the last year or so. And the reason I want to point this out today specifically is because we've seen that this stablecoin dominance has sort of traded within a very narrow band. Okay, so we have this upper band here. We've contacted this at multiple points. So here in February, we've contacted it here in March during the COVID event. We hit it here in September of 2020. We didn't actually contact it, but we got very close here in June and July of 2021. And then when have we contacted it again? It's right here at this collapse in June of 22. So what is a key similarity that all of these points hold? And that is that these have been bearish segments of the market. So people are fleeing the cryptocurrency assets and they're moving into stablecoins. And at these points, you've seen that right when we hit these levels, there tends to be a turnaround in the market. Another key thing that you can see here, and this is probably less relevant to where we're at right now, is that when we contact this lower end, we've been sort of in store for a market turnaround and a turnaround to the wrong side of things. And so specifically, you can see back here during the bull run, so we're talking January, February, basically all the way through May, we were kind of riding right along the green bottom end of this band that we trade within. All right. And we actually hit this one more time here in October of 2021. So every time that we've come down to this level, that's sort of been the kickoff point for the market to sort of turn over and head back down. Okay. So when we come to the top, the market has kind of reached its local bottom and we're in for a turnaround. And when we come down to this bottom end of the band, as the stablecoin dominance shows us, when we hit this bottom end of the band, the market is then set for a turnaround. So am I sitting here telling you then that the market is about to turn around? And no, I'm not. The reason I want to show you this today is because I suspect, based on everything we're seeing in the market right now, we are in a downtrend that it's basically been going on for, almost a year straight now, where the price has done nothing but go down. So not quite a year straight, we're looking at 236 days or so. Since that time, the total crypto market cap, kind of when this downturn started, the total crypto market cap is down around 73%. And we've seen this bleed continuing for 236 days now. So this has just been an absolutely brutal segment of the market. So why am I pointing out that we're right here then? Well, there's always potential that the market sort of has one of these false recoveries where we hit this level and maybe get a rally from here. But I suspect that that's probably very unlikely based on kind of everything that's going on right now. The sentiment is just so poor that I think that we're going to need additional moves down in the market before anything recovers. But at least it's worth noting that once we've been at this level in the past, this has sort of been a point where the market has got kicked off. In fact, if you go back, all the way to really the last cycle, the last bear market in 2018 into early 2019, sort of the bottom was right here, right when we contacted this level. So when we got down to this level, that's when the long-winded rally that went through 2019 into 2020 and eventually into the bull market of 2021. It all started once we got the stablecoin dominance got up to this red band. All right. So we're there right now, and it's at least worth noting. If this really starts to break above this resistance band that we've seen and starts to go to new all-time highs, I think that will be commensurate with a complete washout in the crypto market. Because quite frankly, a lot of junk projects have infiltrated this market that have absolutely no use without incentivizing sustainability and growth. They've, been completely created in order to give a cash grab essentially to the creators. And so that type of project, it's infested the entire crypto market. And I think a lot of these projects are going to need to get washed out. There's a lot of projects that I constantly hear people talking about as being good projects, but they have no users. And so how is it a good project? If you have a project with no users, no apps built upon it, no use case, how is it a good project? Remember, theoretical good technology in and of itself doesn't mean anything. So don't fall into this fallacy that just because the technology appears to be good, just because it's ostensibly good, doesn't actually mean that there's any value in that project. And we're in for a bear market now. Bear markets are where new projects that are serious projects that's where they come out in, because the cash grabs aren't coming out during the bear market. They can't exist in the bear market because there's no cash to be grabbed, right? In the bull market, that's why you get all this junk coming out that, has absolutely no use and exists only to make its creators rich. The bear market is when you see projects that have sustainable and viable long-term growth potential. That's when they come out. So I suspect that this is going to be an important level, guys. And I'm going to continue to watch this metric in particular, because if we start to see this really taking off, that will indicate more people sort of liquidating their assets, capitulating, as we're already down 73%. So if you're selling here, that means you've completely thrown in the towel, because if you're down 40, 50, 60% and you're selling here and you're converting into stable coins, well, that means you've given up. All right, you've given up on whatever sort of project that you were in, and you've thrown in the towel completely. So here we're including the stablecoin market cap with the stablecoin dominance. So the stablecoin market cap is $140 billion, and here's the total crypto market cap, $722 billion. You can see that in general, even though the dominance of the stablecoins is inversely related to the market cap of the total crypto market cap, the fact is that as this value rises over time, they're actually very proportional to one another. So as the stablecoin total market cap rises over time, that means that the total available liquid cash that could move into assets is rising over time as well. What this means is, in general, is that as we continue to see this value rise, you're going to see that in general, the market cap of crypto will also rise. So when we just zoom out, if you go back to 2019, for instance, and we just measure the number of days here, there was around 260 days back then where the total crypto market cap went from around 350 billion all the way down to 130 billion. Okay, so a huge drop off in the total crypto market cap. But when we extend our time horizon, you can see that in spite of the fact that this was falling for 260 days here, when you zoom out, you see that in fact in the same time period, the market cap went from around 115 billion up to around 750 billion, and at a peak of obviously 3 billion. So these stages of the market come and go. If you're on social media all day, all you're going to see now, let's think back to May of 2022, before the UST event, when the total market cap was at around $1.75 billion. Just imagine social media, Twitter, YouTube on May 1st, a few days before UST fell apart. Oh, everything was going to the moon back then. Everything, it's, we're going to make new all-time highs. This is a normal correction. 2 months later, those same people are now, all they can possibly envision in their head is the fact that we're going, everything's going to zero, Bitcoin's going to zero, Coinbase is going bankrupt, just everything is a disaster. So these are, imagine a relationship that you've been in, and the person that you're with is one of these people that's just extraordinarily dramatic about everything. That's not someone that you necessarily want to be in a relationship with. That is YouTube, that is Twitter. They're people that are reactionary. They never slow down and think about what's going on. All they do is react to whatever's happening in that exact moment. And that's not how we want to react as investors. We want to think ahead, think about what's happening right now. We understand that the situation looks dire at the moment, and that there is a lot of negative economic news, which will have an impact on the crypto market. But we also understand that it's times like these where if we step back and we look at what's going on and we, act in a non-emotional manner, because we're investors here. That's how you make money in investing. It's by not being emotional. It's about being rational. It's about understanding where you're at and what could happen based on, all of the factors at play. And therefore we can understand that, there may be a lot of downside potential from where we're at right now, but investing in fundamentally strong assets, investing in those projects over time is very likely, going to make it so that times like now are opportunities for people like us. And times like now are just times for people like them to capitulate. And, we'll do the same thing when we're in our next bull market. They'll be reacting emotionally when we're at 64K. They'll be telling you we're going to the moon. We'll be selling them our bags. So that's it for this one, guys. Until next time, as usual. See you.